and welcome to the Red Pulse YouTube channel. Today our topic will focus on China's STAR market, which stands for the Science and Technology Innovation Board. And yes, that does not exactly spell out STAR, but that does definitely sound better than STIB. In November 2018, President Xi Jinping first announced plans for the creation of the STAR market, then just called the new Sci-Tech Board. The initial idea was that it would be a Nasdaq-like channel for companies to list on an exchange with more robust rules to support innovative tech companies. By March of the following year, the Shanghai Stock Exchange, the SSE, officially published the first guidelines for the new tech board, and in a mere 8 months since President Xi's announcement, official trading began on July 22nd. On the same day, the SSE also released plans for a STAR Market 50 index. What makes the STAR market stand out is that rather than an approval-based listing system that the Shanghai and Shenzhen stock exchanges have, the STAR market is registration-based. This, among with several other different rules, is all part of an effort to support more leading high-tech companies to list on the mainland, boost the real economy, and test the registration-based IPO system in the A-share market. With this new type of IPO system, the STAR market is expected to change Chinese investment banks' business models and bring more business to the security sector. Going into the rules for the board, starting off with the trading system, there are 3 standout rules. First, new stocks have no price limit for the first 5 days after they are listed on the board, and we've seen a lot of volatility in prices since the board opened, which we'll go into later. Second, the daily price limit has increased from 10%, the norm for other mainland exchanges, to 20% after the 5-day period. And thirdly, the board has a T+1 trading system. Again, the IPO system is registration-based as opposed to approvals-based, so that the company has more say over timing similar to the US, rather than waiting on regulators, which can take up to years in China. In regards to requirements, to name a few, the total equity, not capitalization of the company, needs to be worth more than RMB 30 million after its IPO. Outstanding shares of the IPO will also make up more than 25% of the company's total equity. For firms that have more than RMB 400 million in equity, the newly issued shares from the IPO need to make up at least 10% of the total. Firms that have an expected valuation of more than RMB 1 billion need to have an aggregate net profit of at least RMB 500 million over the last 2 years, or be profitable in its most recent year, and have a revenue of no less than RMB 100 million. For firms with a valuation of over RMB 1.5 billion, they should have generated more than RMB 200 million in revenue in the most recent year, and have invested 50% of their total earnings in R&D for the past 3 years. Check out our website with the link in the description to get more information on the STAR Board's IPO requirement rules. For RedChip and VIE structure companies, both entities' IPO rules are the same. Companies should be leading players within their respective industries and have an estimated valuation of RMB 10 billion. If this last requirement cannot be met, then they may have at least a valuation of RMB 5 billion, but have a minimum of RMB 500 million in revenue from the previous year. In terms of the types of companies that the STAR market targets, these include companies with core technologies in the fields of next-generation information technology, high-end equipment, advanced materials, new energy, biotech, environmental protection, AI, cloud computing, IoT, and more. Here you can see the performance of a sample of companies, such as Anji Microelectronics, a private semiconductor materials supplier, Harbin Xinguang Optics Electronics, a developer and seller of software products, and state-owned China Railway, which was the only centrally state-owned enterprise of the 25 initially approved companies to debut on the new exchange, and had the lowest listing price of RMB 5.85 per share. In the first 2 weeks, the 25 companies that launched on the STAR market saw an average growth of 217%. The market saw growth levels well above expectations, and every single company listed at launch had seen over an 100% increase from their initial IPO price, Beijing World Dia Diamond Tool saw the greatest increase with over 433% in growth, and the firm with the lowest growth, being China Railway, saw a relatively measly increase of 114%. Since the star market has been operating for a few months now, regulators are looking to duplicate rules they were piloting on the market to other boards. State Council and the Communist Party of China released guidelines for an IPO registration system on the Chinex board this past August. The guidelines also emphasize strengthening the ability of the local financial sector for researching and improving the listing, refinancing, mergers and acquisitions, and restructuring system of the China. So there you have it, a brief intro on the star market. Hope this was helpful for all of you China watchers out there. Please comment and let us know what you want to hear about next. For more video content, subscribe to our channel. And to get the latest on market moving events in China, subscribe to our daily newsletter at redpulse.com. Links are all in the description. Thanks for watching.